Every time I talk about VAT, I always think I should be going, whoa, ha, ha, like it's some evil monster or a sinister person, because I always feel we're talking about the dark side. But actually, it's okay. I'm going to assume for the purposes of this video that you know that you need to be VAT registered. The question is, did you know there are different schemes available? Lots of people don't. So you can choose which VAT scheme that you want to be on so that the cash flow and the way you pay VAT helps your business. So there are two main schemes that you need to consider. One is the standard rate scheme and the other is cash accounting. Now, those two schemes, there are little complications and there are other bits that we can talk about, and I will do later on. But those two schemes can make your business run more smoothly if you choose the right one or not. So what's the difference? So standard accounting is when you get an invoice, you raise an invoice for your client, you send it to your client, and you've added VAT on it, but they haven't paid you. The VAT becomes due the moment you've raised that invoice. Equally, if a supplier sends you an invoice for work that you've done or something you've bought, even if you haven't actually paid the supplier, you can reclaim the VAT on that invoice and offset it against the invoice for your client. Now, a standard accounting scheme works really well if your customers pay you sensibly and aren't late. What you want is normally the cheapest method of doing VAT. Your bookkeeper and accountants are very familiar with standard accounting. They like it. They can just enter the invoices in, and the VAT gets worked out at the end of the quarter based on the invoices that have gone in and the invoices you've received. The problem is if your customers are slow to pay, or if you've paid in advance of being able to sell goods, that doesn't work for your cash flow. And the whole point of that is that you're a collector of taxes. It should be cash neutral for you. You shouldn't be burdened by collecting VAT, and sometimes people forget that and can end up in a scheme that doesn't work for them. So the point is that a cash accounting scheme means that you work out the VAT based on what's the money that's come in and the money that's gone out. So you effectively look at your business bank statement and you work out what the VAT is on that. So even if you've sent your client an invoice 4 months ago and they still haven't paid you, you're not having to pay the VAT on that invoice. Equally, if a supplier has sent you an invoice and you haven't paid that yet, you can't offset the VAT on that. So it's one of those things, when you're thinking about which VAT treatment you want, think about how your business works. Do your customers regularly pay you? If so, then standard rate accounting is fine. But if your customers are slow, or if you're buying goods in advance of selling them, consider the cash accounting scheme. Your bookkeeper should be able to do that for you. It's slightly more complicated and you have to be very careful to only claim the right amounts, but a competent bookkeeper should be able to sort that, no problems at all. Now, there are some other slightly different schemes that you may not know about. There's the annual accounting scheme, and the way that works is that you still have to pay regular amounts. You estimate basically the VAT that you're going to pay it over on a quarterly basis, and then at the end of the year you work out whether you owe money or are owed money by HMRC. Now, I suppose there are some advantages on that in that the cash flow, you know how much VAT you're going to pay each quarter. The downside, of course, is if your turnover plummets or your costs increase suddenly, you're going to be, the VAT's not going to be right. So I'd get a good bookkeeper rather than go over to annual accounting. The other thing is there's a flat rate scheme, which you might have come across. So that basically is a percentage that you pay to HMRC on a regular basis, and it means you don't have to worry what you can claim VAT on and what you can't. So if you're doing the books by yourself, that's probably a useful one to consider. But I would say, why on earth are you trying to do your books if you don't know about VAT? Get a competent, intelligent thinking bookkeeper to do the books for you, and then you can claim precisely what the right amounts are. Sometimes we come across people at Rosemary Bookkeeping, we come across people who have been on the flat rate scheme, and it's, you know, we usually move them over to a proper standard scheme or cash scheme after discussions with their accountant, just because it's more efficient and it means that you're paying accurately and not too much. That's the main thing, isn't it?